Hey everyone, if you are standing on the precipice of retirement, or if you are already there, sitting on a fixed income, I want you to pause whatever you are doing right now and really hear what I am about to say. You are looking up how to set up an EarnIn account. Maybe you saw an ad, maybe a friend told you about it, or maybe you are sitting at your kitchen table right now, looking at your bank balance, feeling that cold shiver of fear because your monthly check doesn't drop for another 10 days. And the electric bill is due tomorrow. I understand that fear. It is a terrifying feeling to realize that your money has run out before your month has. EarnIn introduced a feature called Cash Out Link, and this is specifically designed to work with income sources like Social Security, Supplemental Security Income, and Veterans Affairs benefits. So, if you are asking the question, can I even use this as a retiree? The answer is now yes, but only if you navigate the setup correctly and meet their strict criteria. If you are determined to move forward, I want you to do it right, without making mistakes that expose your private data or lock your account. To set up this account, you are going to need 3 things ready right next to you: your smartphone, your official income distribution schedule, and the login credentials for your primary checking account. Do not attempt this with a savings account or a prepaid debit card. EarnIn will reject those immediately because they cannot reliably execute automatic withdrawals from them. You must use a standard, active checking account where your benefits or your final paychecks are deposited. You will begin by downloading the official EarnIn app from your phone's app store. When you open it, the app will ask for your email address and your cell phone number to send a verification code. Enter that code immediately because those digital tokens expire quickly. Next comes the critical juncture where most retirees get confused: verifying your income. The app is going to ask you how you get paid. If you are still working a part-time job as you transition into retirement, you will select the employment option and enter your employer's name and address. The app will then ask for permission to track your location via GPS or verify your work email to log your hours. But if you are fully retired and relying on federal benefits, you must look for the Cash Out Link setup path. Here, instead of typing in an employer, you will select your specific income type, whether that is Social Security or VA benefits. The app will then prompt you to link your bank account using a secure third-party connection system. You will select your bank from the list and enter your regular online banking username and password. The system uses this to look back at your history and find your regular, recurring government or payroll deposits. It needs to see a consistent pattern, usually at least 2 consecutive deposits, before it will unlock any cash access for you. If your bank doesn't connect automatically, or if the app throws an error message, do not panic. You will have to go through a manual verification process with their customer support chat. This requires you to upload a clear photograph or screenshot of your benefit award letter or your most recent bank statement showing your name, the last 2 digits of your account number, and the exact direct deposit amount. If your bank's app blocks you from taking screenshots due to security settings, you will need to open your online banking on a separate computer or tablet and physically take a photo of that screen with your phone. Once the app successfully recognizes your pay cycle and your bank connection moves from pending to connected, your setup is technically complete, and the app will establish your daily and pay period limits, which usually start around $150 a day. Now that you know exactly how to set it up, I need you to stand up, look at yourself in the mirror, and ask yourself the ultimate question: why are you doing this? What is the real fear driving you to link your checking account to a cash advance app? The fear is that you are running out of money and you think this app is a safety net. You tell yourself, Susie, it's not a payday loan. There are no interest rates and they don't do a credit check. EarnIn operates on a model where they charge a small service fee for certain delivery speeds, and they ask you for a voluntary tip when you pull money out. If your fixed income is $2,000 a month and you borrow $300 from EarnIn to get through the last week of June, what happens on July 1st? Your check arrives. EarnIn immediately takes their $300 back, and suddenly you are starting the month of July with only $1,700. You are already in a deep hole before the month has even begun. So what are you going to do when the end of July rolls around? You are going to be forced to open that app and borrow $300 all over again, just to survive. Do you see the trap? You have just turned your fixed retirement income into a perpetual loop of borrowing from your future self. You are paying a fee or a tip over and over again just to access money that you already earned, creating a financial leak in a budget that has absolutely zero room for leaks. You aren't fixing your cash flow problem. You are just delaying the day of reckoning and paying for the privilege. So here is your actionable takeaway, the financial boundary you must set for yourself starting today. If you choose to complete this setup, you must treat this app like an absolute glass case that you only break in a true, life-altering emergency. It is not an extension of your checking account. It is not extra spending money for gifts or dinners or grocery trips that went a little over budget. If you find yourself needing to use it, you must immediately sit down with a piece of paper and cut an equal amount of expenses out of the upcoming month's budget so that you can break the cycle instantly. True financial freedom in retirement does not come from apps that let you spend tomorrow's money today. It comes from living below your means, protecting your guaranteed income, and refusing to let any company, no matter how convenient they look, get a direct, automated straw into your monthly retirement checks. Be careful, be smart, and protect your hard-earned money.